here's a look at market action and market activity for the day gone by. And for a market which started on a strong note despite global odds, on high hopes of some policy action, was clearly in for some disappointment. Reserve Bank of India's new policy measure to curb rupee fall have failed to cheer the market mood, and immediately after the Reserve Bank of India communication, Indian markets took a sharp U-turn and we saw an intraday swing of nearly 3% plus for major averages. That's quite a big from the day's high. Banking stocks, they led the market down, and apart from banking, other rate sensitive pockets like real estate and autos, they were also under pressure. BSE Capital Good Index, or the BSE, I beg your pardon, the BSE Consumer Durable Index was the only index which managed to close in the green. But despite today's intraday U-turn, Indian markets, they managed to outperform regional markets. Hero Honda was the biggest loser on the Nifty, and State Bank of India, I checked this one out, it cracked more than 3% from the day's high. So what is the way forward for Indian markets in the near term, in the short term, and for tomorrow? Should one bet on a decline or intraday recovery? Let's discuss that and let's debate that with our experts. For you on this edition of Markets Tomorrow, we have Prakash Diwan and Sandeep Wagle. Prakash, Sandeep, gentlemen, good evening to you. Thank you for joining us. Sandeep, a sharp U-turn, major averages, they corrected by over 3% plus from the day's high. How serious is that and how disappointing is that?
Nikunj, absolutely disappointing, because at one time in the morning we were getting ready for 5250, 5260, and from a high of 5200, the way it reversed, I won't say that it has reversed so much that it will fall down to 4800, 4900. No, I would say that it has come back to a level from where the rally had begun. So we are back to square one kind of. And I still feel we are currently at a support level of 5100, possibly 5100, 5050 is still likely to act as a good support from which we can again go up. But certainly the momentum which was there in the morning after 3 days of good rally, that seems to have been lost. So we may at the most consolidate, we may not just run away what I was expecting in the morning.
Prakash, would you agree with Sandeep's assessment that in the near term, in the short term, we have a floor in place and we have a roof in place?
Well, you know, what's worrisome is the roof seems to be very tough. 5200 seems to have become such a big resistance, and the market's kind of testing this out, but hasn't been able to cross over. But you know, if you look at the bad news part of the whole news flow, we really kind of factored in whatever negatives that we had. There's really not much to expect in terms of disappointments. In fact, the entire build-up today in the first half was actually, you know, based on some sort of an exuberance that you're going to have a bonanza of an announcement, and what finally turned out was just restricted to certain, you know, measures that the RBI could take off, and not really on the entire economy as a whole that was expected. So my sense is today's case was an over-expectation and a disappointment kind of a trajectory, but we'll probably come back to realistic fundamentals back again tomorrow morning. I think market will start discounting the good part of the news flow as well, and then things could start looking much better than what they seemed, at least in the last half an hour of closing today.
Because the fact that today, despite a policy disappointment, India was the best performing market in the entire region. Is that encouraging? Is that bullish?
You know, what seems like happening now is that as the global markets, and particularly, you know, markets which are more dependent on the US and the European outcome, start getting shaky, we probably have seemed to have got some sort of a firm ground that we are on. And as I said, you know, for some time results are away. You already have the monetary policy from the RBI having got through last week. So there's really not much that could upset things. It's only, you know, if I were to seek out one wish, it could probably be the stability of the rupee that could probably turn the tide, and we could be in for some very good times here on. So my sense is, yes, we will. I'm not surprised that we were firm as compared to the other markets, but we need to get some more strength, some more consolidation needs to get underway for it to actually take it to the next meaningful levels.
Sandeep Wagle, HDIL, irrespective of the market mood or the market momentum, HDIL is moving from strength to strength.
Nikunj, yes, but the point is HDIL was a breakout at a level of around 76, 77 at a current level of 85, 86 and closing at 83. I don't feel comfortable. In fact, we have booked some profits what we had advised buying at 75, 76, and though I do see some more upside in case the market rallies from here, which is very likely, I would talk of an upside of around 90. So for a fresh buy, I'm not very comfortable.
90 is still about 7 rupees away. Sandeep, which is still a good upside of about 10-11%.
Yes, but then for that, Nikunj, one has to keep a stop loss of 78. That is what I am not very comfortable about. So for a 6-7 rupees upside, I am not comfortable keeping a stop loss of 5-6 rupees. Yes, if it comes to 78 to 80 and I can get a stop loss of 3 rupees and I play for a target of 88 to 90, 1:3, that is what I meant.
Okay. Auto stocks. Now, it was okay day for Mahindra and Mahindra. Very ordinary day for Tata Motors, but a bad day for Hero MotoCorp. Prakash, as of now, the watchword is Europe. But do you think it's a matter of a week, maybe 10 days? The watchword will be monsoons?
Well, we've been hearing some statistics from the IMD on the monsoon, but it's too early to kind of make any decisive, take any decisive calls in terms of the impact that the monsoon could have. So, it'll be a bit too early, but yes, give it another month or so, and you'll exactly know in terms of what all sectors get impacted. But generally there's been a slowdown on spending, Nikunj, which I think is just going to get compounded if we have a weaker monsoon. But even if we have an average or above average monsoon, the entire impulse to spend money on certain things, if you look at whether it's consumer durables, autos, especially the two-wheeler side, there's a lackluster growth therein, and till we see some sort of an improvement in the overall, the impetus needs to come from the economy itself. I don't think these stocks are going to race up the way we saw probably in the first 2 quarters.
Prakash, would you pay attention to the F&O data, the fact that this time around rollover, at least for the July series, they've been rather anemic?
No, well, we've not seen the start of the rollovers, as early as what we usually do, but in the next couple of days, I'm sure the activity will pick up, because July seems to be getting slightly more critical in the absence of any development that we've not had in the last week or so. If you realize, as you rightly said, post 18th, there's been no news, there's been no news flow that could possibly impact the market. The big event could probably be the announcement of the new finance minister, and that could probably well set the tone in terms of the expectations. So I think if the government is to be relied on to come up with any sort of a positive comeback in terms of news flow, in terms of policy announcements, July would become very critical. And given the fact that even in the US, whatever decisive moves the government has to do, the Fed has to take up for the QE3, will probably set the tone from a global risk perception. So I think the mood could be well different in July, and the rollovers will probably start factoring that in. So maybe my expectation is the next couple of days will be very hectic on the rollover side, and that will set the tone for the entire month of July.
But by and large, you are of the view that in the month of July, more than bears, the bulls will dominate Indian markets.
Absolutely. I mean, at the current levels of the rupee, given the fact that we've already seen the pain of weak results in the last quarter, and probably Q1 FY13 could probably be the last one, and you could start seeing a turning point from the interest rate side also. So everything is kind of converging favorably, and remember, markets would have to discount the favorable stuff at least a quarter in advance. So if we expect the September end quarter to be great, or to be the starting point of a great recovery, then the markets will have to rally in July.
Okay, consumption stocks selectively though are now taking it easy. So Jubilant FoodWorks, it corrected on Friday, but today it appreciated. Asian Paints, it recovered on Friday, but today it corrected. Page Industries recovered on Friday, but on Monday it has corrected. And if I check on Procter & Gamble, pretty much a similar mood. It corrected on Friday, it appreciated on Friday, but it has corrected today. Sandeep Bagle, 2 names for you from the consumer space, the good old Asian Paints and then Jubilant FoodWorks.
Well, Nikunj, I don't see any pattern or any clarity. When you're saying correcting or it recovered, there has to be a pattern and then there has to be a target, which I don't see that at all. So I would not venture into any of these stocks. I mean, if one is not clear on the price action, just a red candle or a green candle doesn't make any sense. So in that sense, I don't see anything. I was seeing a lot of strength in TTK Prestige in the morning, but the way the market spanned out, it triggered our stop loss. I was looking for a 100-150 point upside, but that has not happened. Jubilant has already cracked, so at this level, I don't feel that one should go short at this level. I mean, maybe on a bounce back, yes.
Prakash, what is driving Wockhardt?
Well, I think it seems to be the convergence of not only good quarter that's gone by in terms of whatever numbers you've seen, but probably the promise of continuation of consistency of these numbers in a segment or in a sector which otherwise probably has got lots of shades of grey. So I think the visibility of earnings that the management has indicated, given the fact that they've actually clocked some very decent growth in the last quarter, probably gives the market that conviction. But I'm not from the club that believes that Wockhardt could continue to be a blockbuster. There has to be a time when your stock takes a pause, and you should book profits on a prudent basis. So that's a stage it is in. But yes, there are firm believers that the stock is still on a runaway growth trajectory, and probably they could also be right.
Let's look at Maruti. On a bad day, Maruti appreciated, and it appreciated by about 12.5 rupees. Prakash, if I look at the news environment for Maruti, it's just getting from bad to worse. Petrol car sales have dipped. There is intense competition in the passenger car market, and then the rupee volatility is going to substantially hit their bottom line.
Well, yeah, if you look at the kind of factors which are going against Maruti, and that's exactly one of the reasons why it had lost all that ground. But then it's found itself, thanks to the same factors, in an oversold zone of sorts, and it's trying to actually recover out of that. And the recovery is, today's, of course, recovery was in the anticipation of the rupee firming up, and you probably had the short sellers actually getting squeezed out. But I think more than that, from a fundamental perspective, Maruti will have to reinvent itself on a lot of areas, especially in the small car segment. They are, I believe, trying to relaunch the 800, which used to be the staple growth engine for themselves. But somewhere that needs to be seen before we actually take a call. But if those things happen, probably Maruti could be back on track. But minus that, it will probably be a sideways kind of a stock and continue consolidating at these levels with some sort of a stress.